I'll be the one who will be taking you through. Okay. So if at any point in time you cannot hear me or I am not audible, please advise me so that I can adjust my camera settings here on this end. However, I would like to welcome you all to our first session for financial reporting and analysis, So that's what we are doing here today. Okay, so I'm just trying to make sure that everyone who is in here, because I've got another class that I need to do later. All right, so financial reporting and analysis, this is a first year course for students that are doing quite a number of different courses, right? Let's see, let me go to your study guide. So it's a first year course for those that are doing BCom in HR, in supply chain, information management, marketing, project management, financial management, and also those that are doing BBA. So we will notice that we will have a lot of different students from different courses. However, within this course, we mainly focus on financial reporting and analysis. I have another class for economics for those that are interested, but I will talk about it at a different stage. But for financial reporting and analysis, we are saying that as a student of commerce, right, or as a manager at your workplace, you will, at one point in time, or at a certain point in time, you will have to look at the financials of an organization. You have to look at the performance of your organization. Now, when you look at the financials or at the performance of your specific organization, you are going to need to understand the figures that you'll be looking at. So this course will adequately prepare you for you to be able to understand the financial reports of various or of different types of organizations. So you are understanding, what do these financial reports mean? What do these different figures that you're looking at mean? And how can you analyze them as a manager or as an employee of said organization, so that you'll be able to understand whether the organization is actually profitable or the organization is making a loss, so that this can become an input in your decision-making process as a manager at the end of the day. So there are three types of organizations that we are going to look at. So there's going to be what we call a sole proprietorship, there's going to be what we call a partnership, and there's what is going to be called a company, right? So those are the three types of organization that we're going to. So these organizations are the main types of organization that you're going to see. So a sole proprietorship, we are saying that this is basically an organization which is owned by one individual. So if you're operating a business and you're the main owner of the business, there is no other owner. And that business usually is not formally or legally registered. We call that a sole proprietorship. So again, as a sole proprietorship, you are going to prepare some financial statements, or you're going to prepare some financial reports. So we're going to show you how you prepare those reports and how do you analyze those reports. Then when you're looking at a partnership, we're looking at types of businesses where two or more people come to do business together, but they do not formally register the business as a company. Right. So again, that business is not exactly a formal business setup, but there are two or more people that are together. So we're going to look at how do the financial statements or financial reports of a partnership differ from those of a sole proprietorship. Then lastly, a company. Company is the most common form of ownership that we will notice. And again, we're going to look at how do you prepare the financial reports and how do you analyze or represent the financial reports of a company. So those are the three things that we're going to look at, the three companies, the three organizations that we're going to look at. But there is a common thread between these three organizations. You are going to prepare the same financial statements between a sole proprietorship, a partnership, and a company. So these financial statements, because you're going to prepare the same thing. So before we go into the differences between the two, we are going to have to do unit number 1, which is understanding financial statements or understanding financial reports, which actually covers all of the three different types of organizations that we are going to look at. So if you completely understand unit number 1, you will notice that it will be very, very easy for you to understand unit number 2, unit number 3, and unit number 4, because all of them are based on unit number 1. Then once we are done, then we will do unit number 5, which is the analysis of the what? Of the financial statements. So that's basically what we will be doing when we're doing what? Financial reporting and what? And analysis. Now, so what I'm going to do today is I'm going to provide you guys with a brief of how the classes are going to be conducted, so that those that want to join the classes can join the classes. Then also, I'm going to do unit number 1 or 2 things from unit number 1. And then I think on Tuesday, we've got another class where we'll do again a couple of things again from unit number 1. Then after that, we'll officially start the classes where we'll be doing the calculations and etc. Right. So for those of you that want to join these classes, right, starting in February, the classes will officially start in February. The classes that we'll do in January, these will be free. So the class that we do today will be free. The class that we'll do next week will also be free. I think the one that we'll also do maybe next week, Saturday or so, will also be free. These are just introduction classes, just to help you see what our financial reporting and analysis is all about. Those will be free. But in February, we'll start the official classes where we will actually be doing past exam papers and examples and whatnot. So for those of you that are interested in those classes, we've got 2 major packages. The first package is for 600 Rand, which is just the lessons and the exam preparation plus some assignment tips. Then package number 2, which is going for 800 Rand, is the lessons, the exam preparation, plus you will get one-on-one assistance with the KCQs that you guys need to do at the end of the during the semester. Right? So what essentially will you be getting if you make your payment for these modules, right? So like I said, there are some free classes that we're going to do. There'll be 2 or 3 free classes that we do before we start in February. Then we'll also go through lessons for all of the different units, right? We'll go through your lessons for all of the different units. Unit number 1, I think we'll do 4 lessons. Unit number 2, 3, and 4 will do 1 lesson each. And then unit number 5, I think we'll do about 2 lessons or so. So we will do lessons on all the units. Then in addition to the lessons, there will be some homework and solutions for the homework that you are going to be provided. And then we're going to do past exam papers, at least 3 past exam papers, and I'll provide memos of the answers for those past exam papers. And then lastly, there are assignments that we are going to help you with. We're going to provide you with the assignment answers for the assignments that you guys need to do. That is if you join the package number 2. All right. So in terms of the outlook of what to expect in terms of during the semester, so you guys are going to have 2 KCQs just like you did last semester. The first one will start on the 13th of March, right? And the second one will start on the 4th of April. So your KCQs, just like last semester, these will be multiple choice questions that you will need to answer. So within these multiple choice questions, some of them will be asking theory, some of them will be asking you to perform calculations. So some of them will be just theory, but some of them will ask you to perform a bit of some calculations in order for you to answer them. So it may be 10 questions or 20 questions, depending on the lecturer. Sometimes it changes up. I wouldn't really know, but it may be 10 questions or 20 questions for each KCQ that you're going to do. Then in addition to those 2 assignments, those 2 KCQs, you're going to have an exam at the end of the semester, right? So I'm going to show you an example of what your exam is going to be looking like. Okay, just hold on. I'll show you an example of what your exam looks like so that you have an idea of what to expect. So this is an example of an exam. This was written in November 2021. I have some past exam papers for 2022 and also for 2020. I think I've also for 2019. That I've got a lot of the past exam papers, but this is an example of your examination, right? So in your examination, you're going to be given 5 questions, and they're going to ask you to answer all of the 5 questions. So these questions, most likely 4 of them will be calculations, and then 1 of them It might be calculations or it can be theory, it depends, but at least 4 of the 5 questions will be calculations, right? So you can see here, for example, question number 1 here, it's going to ask you, let's see, what does question number 1 want us to do? Question number 1 says here, prepare a statement of comprehensive income. So it needs you to prepare a statement of comprehensive income. A statement of comprehensive income is just a summary of the financial performance of an organization. So that's what you've been asked to prepare. So you're going to use the trial balance, you're going to use the additional information. So you can see there's a lot of figures and a lot of numbers. So during the course of the semester, I'll be teaching you how to interpret each of these figures so that you know where do you put insurance? How do you adjust the payments that will be made, and etc. And how do you take care of the additional information provided so that you can prepare your statement of comprehensive income. So you see, number 2 here, it says prepare a statement of changes in equity. This is again calculations. Number 3, prepare a statement of cash flow. Again, this is our calculations. Let's see. Number 4, calculate some ratios. So ratios, again, is calculations, but it's a bit of theory. But you need to calculate some ratios, and they list the ratios that you need to that you need to calculate. And then it says here, are the collections satisfactory, which means this is a bit of theory also. And then number 5, prepare statement of financial position. So this is calculations. So you can see in this paper, 4 of the questions were full of calculations. And then 1 of the questions, part of it was calculations and part of it was what? Was theory. So you will notice that during the semester, most of what we're going to do from February, March, April, and etc. will be calculations. Most of the theory, I'm actually going to cover it during the free classes. That's when I'm going to cover most of the theory, so that you at least know what our finance is all about. But the calculations, we do them in February, March, etc. Right. So this is an example of the question paper that you're going to be doing. Right. So like I said, it's going to be 2 assignments. The assignments are in the form of KCQs. They'll be in the form of quiz. 2 assignments plus an exam at the end of the semester. So if you are joining my classes, the assignments, you don't need to worry about them. We'll attend to them. And then the examination, we'll do some past exam papers to prepare you for the examination. The class that I had last semester, I did not have any student that failed. I think about half of the class had distinctions. So it's usually a very easy process. As long as you follow through what we're doing in the class, you will not have a problem with your examination, right? So I think this basically covers in terms of what we're going to do. Then I know maybe you've got a question that, look, these days there's a lot of load shedding that is happening. So how are we going to tackle that? So what we usually do is, if I check and I see that there's going to be load shedding on a day when we're supposed to be having the class, I will do a pre-recorded class during the day, right? I'll do a pre-recorded class during the day, and then I'll send you guys a recording of the class, so that if I'm not available due to load shedding for whatever reason, you can easily go through the recording that I've done during the day, so that we don't miss any classes. So all the classes that we're going to do will be recorded, and then whenever there's load shedding, you are going to get a pre-recorded class, so that you can also watch it at your own time. So even on your end, if you have load shedding on your end, you can always get the recording for the class that was done in your absence, right? Then I'll also make an effort. For example, if let's say there's 2 consecutive weeks where there's load shedding, then we can reschedule to a different day or a time, so that at least we can catch up and do some calculations together as a team, so that we also don't just feed only on the recordings, but you can also have those one-on-one interactions that we can have during the classes, where you can at least ask questions and etc. on any of the issues that may be difficult for you at the end of the day, right? Okay. What else do I need to highlight here? Okay, so I think I've highlighted this already. Unit 2 to unit number 5, we are going to do it in March, and then in April we are mainly in February we are mainly focusing on unit number 1. The reason why we spend more time on unit number 1 is, like I said, you will notice that unit number 1 is the foundation of everything else. If you get unit number 1, even just with unit number 1, and you go into the exam, just having done unit number 1, I can guarantee you will pass. But unit number 2, 3, and 4, these are basically a revision. You are now just looking at the differences where you're saying that, okay, so when we're doing this one, we need to add extra information. When we're doing this one, we need to subtract this. But if you understand unit number 1, then you are good to go even for the examination. So we're going to spend almost a month on unit number 1, and then the other month, we're going to do unit number 4 to 5. And then the last month, which is April, we will do the revision. We will do the revision. All right, so let's see. Okay, so I think you've already seen this. This is the units that you need to do, right? So understanding financial statements, right? This is unit number 1. This is where we're going to start. So today and on Tuesday, and I think maybe next Saturday, this is where we will be focusing our energy on. We'll be doing from 1.1 up to 1.7. Then in February, we'll be doing 1.8, which is summarizing the financial information, right? Which is now the calculation side, where you need to know how to calculate different financial reports that you need to watch, that you need to prepare. Right? So before we go into some of the nitty-gritties, right? So you can see your lecturer listed it up very, very nicely. If you go through your study guide, you start with the raw financial statements, the users of financial statements, accepted accounting, whatnot. So there's a lot of different things that are there. But my approach sometimes is I will not exactly follow what is there, but we'll still come back to it. The reason why I do so is I need you to understand certain concepts so that when we come back to those issues, you have a better understanding of what we are trying to what we are trying to do at the end of the day. So for example, right now, the first thing that I need us to do is I need us to really think, what is accounting? Why are we studying accounting? Why do we have this course of financial reporting and analysis? Now, when we are dealing with accounting, basically, we are saying that an accountant is someone who comes in and measures and then processes and communicates financial and non-financial information about an organization, right? So we're saying that there is certain information, right? There are sales. Sales is financial information for an organization, right? Profit is financial information of an organization, right? The number of the amount of cash in the bank account is financial information for an organization. So a person who comes in and measures what are the sales, what is the profit, what is the balance in the bank account, right? And then processes that information and then communicates that information, whether it's communicating it to the managers or it's communicating it to the employees or to the owners of the business. That person is basically performing an accounting function within the what? Within the organization. So that's what accounting. Yes, I'll share the slides after the class, right? So that's what accounting is basically about. It's just about measuring, processing, and communication financial information for what? For an organization. And remember what I said, organization, there are different types of organization. And we've already seen that there's sole proprietorship, there's partnership, in this company. So those are different types of organizations that you're going to see, right? As a what? As a student of what? As a student of accounting, right? So you notice, right? Okay, sorry. This one got back. You notice that he talks about the role of financial statements, and then he talks about the users of financial statements. I'm going to briefly talk about these things. We'll talk about them in detail later, but I'm just going to briefly highlight some of the information. So as an accountant, right, or as a person who needs to understand financial information, there are two facets of financial information. There's what we call financial accounting, and there's what we call managerial accounting. Now, you guys in your second year, you are going to do a course called management accounting, right? So for this semester, we are not going to be talking about managerial accounting because you're going to do it in your second year. But this course of financial reporting and analysis is going to delve more on the financial accounting side, on understanding the financial accounting side. So when you're looking at the financial accounting side, you're basically looking at someone who is trying to take information and communicate it to people that are outside the organization. That's why it's called financial reporting and analysis. You are reporting to people that are outside the organization, which means that the primary user of the information that you have is someone who is outside the organization, because you are reporting to them. They are going to take that information and then analyze it, right? So financial reporting and analysis is now going to focus on the things of the past. Why is it focusing on the past? Because a report, you are looking at information about things that have already happened. You're saying that the company operated last year, and these were the reports from last year, right? So your focus is on the past of whatever is happening. And then you're also going to look at what we call the standards of reporting information. You're going to look at rules. So all of this is more pertinent to financial accounting or financial reporting and analysis than it is on managerial accounting. But like I said, managerial accounting, for now, don't worry too much about it. We're going to talk about it next year. But managerial accounting is more about decision making. It's more about management. It's more about the future. And it doesn't really look at the standards or at the rules of reporting at the end of the day. But you might get some questions in your KCQ or in your assignments that will ask you to differentiate between financial accounting and managerial accounting at the end of the day. If you get that, come back to this specific slide. It should give you just a rough breakdown of what we are talking about. But I've already given you just an idea of that, right? So going back now, when we are saying the role of financial statements, what we are saying, like I said, I'm going just brief. I'm going to talk about it later at a deeper stage, but briefly, what do we mean by when we're saying role of financial statements, right? So in an organization, you will notice that you are going to prepare some reports. You're going to prepare some financial statements. Now, these financial statements that you're going to prepare within your organization, right? There are different types of financial statements that you're going to prepare. I'm just trying to go to the slide with that. Okay. There are different types of financial statements that you're going to prepare. Each financial statement will represent or will give different types of financial information. So, for example, there's a financial statement called financial position, a statement of financial position. A statement of financial position basically tries to tell you what is the value or what is the financial position of an organization on a specific day, right? So, for example, if you look at yourself as an individual, if I ask you what is your financial position, I'm asking you, how much cash do you have in the bank? How many cars do you have? How many houses do you have? So that's your financial position at the what? At the end of the what? At the end of the day. That's your financial position at the end of the day. So we are going to go deeper into a statement of financial position. We're going to understand it, but that's basically that's the role. So it shows you the financial position of an individual or the value of an individual at a specific day. Then if you look at something different, like a comprehensive income statement, right? Comprehensive income statement, they are now asking what is the performance of the organization? What is their financial performance over a period of time? How much profit did they make within a year? How much loss did they make within a year? That's performance of the organization over a standard period of time. So that becomes a role of financial statement to show you whether you made a profit or you made a loss over a period of time. If you go to statement of changes in equity, you're asking yourself, who is the owner of the business and what changes happened in terms of the investments that they made in the business? If they invested 50 million in the business at the beginning of the year, at the end of the year, have they still have 50 million, or they now have more in the business, or they now have less in the business? If you're looking at a cash flow statement, you're also checking the cash position. If you look at the bank account, what changes happened in the physical cash and in the bank account of that specific organization? So that becomes the role of the what? Of the financial statement. But like I said, we might go deeper into some of these areas when we start going into the what? Into the calculations, right? And then, in addition to the role, the next unit, the next part talks about the users of the financial statements. Now, again, remember what I said, users of financial statements are people that are benefiting from your financial reporting and analysis. Now, this can be internal or this can be external. Usually, when we're looking at financial reporting and analysis, we're looking at external users of information. But internal people can also use this. But usually, this now falls under managerial accounting most of the time. But the internal users of financial statements are the owners or the shareholders of the business or the employees, the people that are working within the business or the management. So what you as the student need to understand when we're talking about a user of a financial information is what do they need the financial information for? You have to ask yourself that question. what do they need it for? So if I say, for an example, I say an employee is a user of financial information. What I am trying to tell you as the student is basically that an employee at the company, maybe they want to know if you as the company will afford to pay their salary at the end of the year or pay their bonus in November. So for them to be able to tell that, they can study or analyze the financial information, and they'll be able, oh, look, the company has got 6 million in extra cash flows. So yeah, I think we are going to get bonuses in November, right? So that's an example of a use of financial information or financial statement by an employee. Management, what does management need the reports for, or what do they need the statements for? So a manager, remember, is a decision-making unit within an organization. So a manager, if they look at the financial statements, they can say, for example, let's say that you are buying some equipment from a supplier, and they are asking, should we pay cash right now for this equipment, or maybe should we negotiate with the supplier for credit terms so that we can pay it after 90 days? So they can look at the financial position and they can see, oh, we've got 90,000 in cash, but this supplier is charged us 300,000. They can therefore say, look, according to our financial statements, we cannot afford to pay cash. Therefore, they can make a decision to go to the supplier and get credit terms. So management use financial statements to make decisions within the organization. Now you might ask, what about an owner? What do they need the information for? An owner of the business can look at financial statements to see if someone is stealing money from the organization, to see if the organization is making profit, if they're going to get some dividends or some profit sharing at the end of the year. So those are internal people. What about external people? What do external people use financial statements for? Right? So external people, example, a bank is an external people, because a bank does not own the business, but they might have some relationship that they have with you. Maybe they have a loan that you've taken from the bank. So they can use your financial statements to make a decision whether to give you a loan or not. Because if they look at your financial statements and they see that you cannot afford to pay them back, or they see that you are making losses, then they become skeptical because there is too much risk for them to give you a loan. So they can refuse you a loan if your financial statements are not proper or are not showing any profits. The same with suppliers or creditors. A supplier or a creditor, if they want to give you credit terms, or if they want to get into a relationship with you, they can look at your financial statements to see whether you're making profits or not, to see whether you've got cash to pay them or not, and then they can make a decision whether to partner you or not in a transaction, right? Government, what does the government need with financial statements? Your taxes. So a government can want to calculate, should we charge this company taxes this year, or are they committing tax fraud? So they analyze your financial statements. The same thing goes for auditors. They're looking for fraud. The same thing goes for investors. They're looking to see which companies can we invest in at the end of the day, right? So those are users of financial statements, right? So 1.4, I'm going to skip it for now. General accepted accounting practice, I'm going to skip it for now. And then also 1.5, I'm going to skip it for now. We're going to do it in our next lecture. But what I want us to do is 1.7, classification of financial information. The reason why I want us to do this one first is the information that we're going to talk about and the examples that we're going to use under 1.4, 1.5, and 1.6. They need you to understand some terminology that I'm going to be using. So you now in 1.7, we're now talking about terminology. So if we do 1.7, and then in our next class, we'll do 1.4, 1.5, and 1.6. And then we can now move to start doing the calculations. All right, so let's do a classification of financial information. All right, so classification of financial information. So this course that you're going to do during the semester, you are going to be hearing a lot of words like assets, liabilities, equity, expenses, income. You can see I was only talking about cash, about profit, about losses. So that's the terminology of someone who understands accounting theory, right? That's the terminology of someone who understands accounting theory. But for you to really understand some of the concepts that we're going to talk about, let me define what these things are to you, so that you can now understand whenever I say assets, or whenever I say profits, whenever I say losses, what exactly am I talking about from a financial standpoint, right? So that's classification of financial information. So whenever we say assets in accounting, an asset is basically a resource of economic value to an organization. Now, let me give you an example so that you can understand. So, for example, if you are in the delivery business, right? If you're in the delivery business, a vehicle is a what? Is an asset. A vehicle is an asset. Why are we saying it's an asset? We're saying it's a resource that you have. The vehicle is a resource, but it is of economic value to you. Why? Because we're saying that resource is going to generate you an income as an organization. How is it generating an income as an organization? We are saying that because you're in the delivery business, when your vehicle travels to a certain area, customers are going to pay when you're delivering those goods or those services. So that's the economic value that you are deriving from your what? From your vehicle. So that's an example of an asset. All right. So let's say that you operate a tuck shop, right? You operate a tuck shop, you're selling some groceries, right? A building can be of economic value to you. Why? Because you're saying that within the building, this is where you've established your business premises, where people can visit you, get into the shop and buy different things within the shop and get out. So the building itself is generating you a space where you can operate and get a profit as an organization. But within the building, there is going to be stock or going to be inventory. You're going to be selling bread, you're going to be selling cereal, you're going to be selling Coca-Cola within that. Those things that are within the building are also assets, which is called stock or inventory, because they are also generating economic value to you as an individual or as a business. So anything that is generating, any resource that you have that is generating economic value is called an asset, right? But this economic value, for it to be called an asset, we say this is what is called future economic benefit or future economic value. So what do I mean by future? I think that if you buy a car right now, just looking at the car right now, it's not generating anything when you're looking at it. But within a day, within a month, within a year, it might generate you some income. It's not always straightforward because it can have an accident and generate nothing in the future. But you are hoping that tomorrow, within a month or within a year, it's going to generate an income for you. So that's future benefit. There's a reason why I'm emphasizing future benefit. We're going to talk about something else that generates current benefit. But future benefit, that is an asset, right? So you control the asset. If you don't control it, it might not be an asset to you. You have to control it as an organization. So that's an asset. So there are a lot of examples there. Stock, inventory, whatnot. There's an exercise that I want you to do as a homework. But those are different examples of assets. Now, assets can be classified differently. There are different types of assets that you're going to see in an organization. There are what we call tangible assets, and there are what we call non-tangible assets. Then there's what we call current assets, and there's what we call non-current assets. It is important for you to understand some of these concepts. Right? So when we're saying a tangible asset, we are saying it's an asset that you can hold. Right? So for example, a building is a tangible asset. A vehicle is a tangible asset because you can hold the asset. Right? But there are some assets that are not tangible. Right, let me give an example. If you look at an organization called Coca-Cola, right? The name Coca-Cola is actually an asset. But can you hold Coca-Cola as a name? No. There are buildings at Coca-Cola, those are assets. But the actual name, the name Coca-Cola, is actually an asset. Why do I say it's an asset? If today you were to make your own drink and just put Coca-Cola on the drink and start selling it, they can go to court and sue you that you are using their name. Why are they suing you that you're using their name? They're saying customers, when they see the name Coca-Cola, there is a certain expectation or is a certain service that they're going to expect. Some customers will just buy the product simply because it has the name Coca-Cola on it. So that is what is called goodwill. We're saying that the company has invested so much advertising, so much resources into its name that just by the name Coca-Cola alone, someone will buy a specific product. right? So for example, these are these new drinks that Coca-Cola is coming out these days, you know, a Fanta pineapple. I think there's another Fanta something that they're coming up with, but they're just put a name there and you buy it because you say, it's Coca-Cola, it's Fanta, it should be good, even though you've never tasted it before. So that's goodwill. That's not tangible, that's intangible, but it is still an asset of the organization, right? That they have, right? And then non-current versus current assets. When we're saying non-current, we're saying it is fixed, right? It is fixed. So for example, a building is a non-current asset. It is fixed. You cannot easily change or you cannot easily reduce the value of a building, right? Whereas current asset, you can easily change the value of a current asset. What do I mean by that? If you have an asset that whose value is constantly changing within a year, it's called a current asset. So for example, stock, if you are operating a grocery shop, right, and you have got bread. So today you can say I've got 100 Rand worth of bread in my shop in the morning when when Sunbed delivers bread. You have 100 Rand worth of bread in the shop. But by the end of the day, if people buy the bread, do you still have 100 Rand worth of bread? No. You now have got 0 worth of bread because the bread has been sold. It is no longer an asset to you. But the asset that you're now holding is now cash, which means that your bread is converted from stock and now it is cash, which means it's changing. It's constantly changing at the end of the day. So if you have an asset that is changing in nature within a space of 12 months, it's called a current asset. So examples of current assets, stock inventory is an example of a current asset. Cash is an example of a current asset. Because if you've got cash in the bank account in the beginning of the year, most likely you're going to use the cash to pay salaries, you're going to use to buy stock, so you're not always going to have cash, it's always changing. So that's an example of a current asset. Then another example of a current asset is what we call debtors, right? So if a person buys something from you and they don't pay you money, which means that that person owes you money, right? So it means that for that 3 months that they owe you money, they are an asset to you. Because they're saying that they owe me 500 Rand, right? I might not be holding the 500 right now, but they owe me 500 Rand. So they are an asset. It's called a trade receivable or a debtor. They are an asset to you. But they are what? A current asset, because within 3 months, they will pay back. Now you're now holding cash. You're no longer holding the data at the end of the day. So that's the difference between current assets and non-current assets. Now, I would encourage you, I'm going to send you these slides after the lesson. I would encourage you to go through all these different assets that are there and then try to differentiate whether that asset is a current asset or a non-current asset. And also try to understand whether you actually understand what it means. If you don't understand what it means, and then within our next class, I can explain it to you, right? So an example, you can see example here, inventory. I'm highlighting it's goods held for sale, and this is a current asset. So you're just going to take all of these different things here. Plant and equipment, what is plant and equipment? What is a building? What is goodwill? What is a patent? What is cash? What is a prepayment? What is an office chair? What is whatnot? And describe it and highlight whether it's a current asset or a non-current asset. Anything that you do not understand, you can send in the group, I will respond, or within our next class. Before we start the class, we can start by just going through them and seeing if you guys understood each and every asset. The reason why you need to understand each and every asset, right, is when we do the exams, you are going to prepare an income statement. Income statement, you're going to have list of expenses. Financial position, you're going to have list of assets, and there's going to be subheading, current assets and non-current assets. So you need to know, where does this thing fall under? So let me show you something here. You need to know, where does this thing fall under, right? So let's look at our past exam paper there. That first question that I showed you. Do you see this? It says motor expenses, rent expense, stationery, bed debts, salaries and wages and whatnot. So these are examples of assets, liabilities, incomes, and expenses. So you need to know, if I am looking at something called bad debts, does it go under current assets, non-current assets? Does it go under liabilities? Does it go under income? Does it go under expenses? So that you can properly put it when you are preparing your financial statements at the end of the day. So please, in your spare time, do this exercise, and then when we meet on our next class, this will be the first thing that we'll do. We'll just quickly go through them together so that you can see whether you did it correctly or there are things that you did not understand that you might actually need to get more information on. Right? So that's homework number 1 for you guys, right? So that's assets. So remember, there were 5 things. There were assets, liabilities, equity, expenses, and income. So we've now covered assets. Let's go to liabilities. So what is a liability? So a liability is when a person or when a company owes you an amount of money, right? Sorry. Is when you owe, sorry, not owes you, when you owe an amount of money to someone, to a company or to a person. So basically what we are saying is that you as an organization or you as an individual, if you owe money to someone, right? So for example, I know some of you guys, maybe you go to Mr. Price and you've got an account with Mr. Price. You take some products from Mr. Price, right? Once you take those products, you don't pay for them. You pay for them maybe month 8 or after 2 months. So during that period of time before you pay for the products, you have a liability, which means you owe Mr. Price that amount of money for the products that you've taken. So that's what a liability is. So liabilities are settled over time. So they can be settled within a year or they can be settled over more than a year. That's important. We want to talk about why I'm saying that's important. They can be settled within a year or they can be settled over a period that extends above a year. So again, those are examples of different types of liabilities. So a bank loan, if you as an organization have a bank loan, that's a liability. If you as an organization have got a mortgage, that's a liability. If you as an organization have got an overdraft facility, that's a liability, right? If you've got a debenture is basically like a loan. It's just basically a bank loan, but it's just finance terminology, just basically an official bank loan taken on the stock exchange, something like that, right? And then if you have not paid your taxes, so if the government charges you some taxes and you've not paid those taxes, that's a liability. If you say this year we are going to pay our shareholders 30,000 in profits or in dividends, but you have not yet paid them, that's a liability that you have as an organization. If you have got some rates, for example, your electricity or your water bill comes in at the end of the month and you have not yet paid it, that's again a liability for you as an organization, right? So liabilities, we're basically saying you owe someone money. You are either going to pay them within 12 months or you are going to pay them after 12 months. If you are paying them within 12 months, it's called a current liability or a short-term liability. If you are paying them after 12 months, it's called a long-term liability or a non-current liability. So again, I would want you guys to take these things that are listed here, these examples of liabilities, and again, put them in a table, highlight whether it's a current liability or it is a non-current liability, and then explain your understanding of each and every term. Again, if you don't understand any of the things, when we meet in our next lecture, that's the first thing that we'll go through. So that's our homework number 2 that I would want you guys to do. Again, these homeworks, I'm not saying go and never talk about them. Within the next class, that's the first thing that we do to see if you understood and if you've got any questions on any of the homework that I would have given you. So that's liability number 2, right? So again, assets, liabilities. The next one is income and then expenses. So let's talk about both of them, income and expenses. So remember, we said an asset gives you future economic benefits. But when we are talking about income, we are saying that if there is an increase in economic benefit today, we highlight that as an income. If there is a decline in economic benefit, we highlight that as an expense at the end of the day, right? So an income is basically an increase in the economic benefits that arise through whatever you are doing. That's what ordinary means. Whatever you're doing on a day-to-day basis as an organization. If your income, your economic benefit is to increase, we are saying that it's an income, right? So an example of what an income is. So if you are in the grocery business, right? If you're in the grocery business and you sell bread, so selling the bread will generate an income for you. The bread itself is an asset, but selling the bread will generate income for you as an organization at the end of the day. So if you're in the rental business, right? If you're in the property business, the building, the houses that you have are assets. But when you rent out these assets, right? At the end of the month, you are going to generate rentals, which becomes an income. So assets are what generates income for you as an organization at the end of the day. Right? So sales are examples of income. Rentals received are examples of incomes. There are a lot of different types of income. You will see these are examples underneath. Then expenses. Expenses come in the form of three things, right? An expense can either be a decrease in equity, a depreciation of an asset, or an appreciation in the value of a liability. Don't worry if you didn't understand what I said, I'll explain. So what do I mean a decrease in equity? We are saying that if within an organization, your ownership of the organization is declining over time, your value of the organization is declining over time, that is an expense. Usually you will see that in the form of a loss for an organization, right? So that's number one. Then number two, appreciation of value of an asset. Right? So remember, we said an asset, for example, a vehicle, a car is an asset for an organization. So if you buy a car, right? Let's go to Mercedes right now, or maybe to Toyota, and let's buy a twin cab, right? We buy a car right now, maybe the cost is 500,000 rand for you to buy the car. It's 500,000 rand. After you spend 500,000, if you use the car for 1 year, be honest with yourself. If you use the car for 1 year, if you want to sell it to someone else, you think you sell it for 500,000? No, right? You are going to sell it for less. The difference between the price that you paid for that car and the price that you're going to sell it for after 1 year, that's an expense. That expense is called the depreciation. So the depreciation or the loss in value of an asset over time is also an expense. And then appreciation in the value of a liability is an expense. So if you have a liability, right? So for example, if today you owe someone 30,000 rand, and then in 2 months' time, that person tells you, no, you have to pay me 32,000 rand instead of the 30,000 rand, which means that your liability is increased by 2,000. You did not borrow the 2,000, it just increased. Maybe he's charging you some interest or some charge, whatever it is. That increase in the value of the liability is an expense to you as an organization. So those are the three, the nature of the expenses that you're going to see. But however, also as you generate revenue in an organization, you're going to have to pay rentals, you're going to have to pay insurance, you're going to have to pay stationery, you're going to have to pay for water and electricity, all these different things that you're going to pay for. These can also be regarded as the expenses of the specific organization. So lastly, the last homework that you're going to do in this area is this whole list here. This whole list here. These are different types of assets, different types of liabilities, different types of income, different types of expenses. I would want you to go through the table again. You don't need to describe them, but at least categorize them correctly, whether it's an asset, it's a liability, it's an income, or it's an expense. When we meet in our next lecture, again, we'll look into that table to see that is there anything that you did not understand. So the advantage of doing this is if you see something that you understand, you can even also Google so that you can also look at the definition. It will help you when you now do your exam, because you now know all the different types of expenses, all the different types of tax, all the different types of incomes, and etc. Because we cannot go one by one in teaching you each and every one of them. It will take us quite a lot of time. So you now notice that we have done assets, liabilities, income, and expenses. So there's one thing left, which is what? Which is equity. What is equity? So when we're talking about equity, we're just looking at the owner of the business, right? If you own a business, there is money that you have invested into the business, and that is what we call equity, right? If you start a business selling tomatoes and you have to buy a farm to do the tomatoes, you have to buy a shop to do the tomatoes, all those things that you're going to do. At the end of the day, after you've subtracted any other claims that have been made, whatever money is left is for you, the owner of the business. So that is equity. So the building, right, it's yours. It's part of equity, right? The vehicles are yours. They're part of equity. The only thing that is not yours is the liability. Because remember, liability, we are saying that you owe someone money. That's what a liability is. You owe someone money. Now that you understand what assets are, liabilities are, what do you call this? Income is, expenses are, and equity is. You now introduce you now to what we call the accounting equation. So this is where your calculations will start coming through. This is where you start seeing us now starting to talk about calculation department. So accounting equation, basically we're saying assets is equals to equity plus liabilities. We are not going to cover this today because we're almost at the end of our time. But when we meet next time, we are going to do the accounting equation, which is basically the basis of all the calculations that we're going to do throughout the module. Then once we've done the accounting equation, then we're going to now talk about the general accepted accounting practices, the value and limitation of financial statements, and characteristics of good financial statements, right? So that's what we're going to do in our next class. The accounting equation and these units, unit number 1.4, unit number 1.5, and unit number 1.6. Then we know we are done with the theoretical part of the study module, which means that when we meet maybe the coming Saturday, then we do 1.8, we start to do the actual preparation of the financial statements and whatnot. Okay. So are there any questions for me for what we've done today? Are there any questions for me for what we've done today? Okay, if there are no questions, then that's wonderful. Okay, so I'm going to share the lecture notes of what we were studying today for today, right? And then I'm also going to send you the link to the video. Unfortunately, the video might not come right now. It might come later during the evening because I have to upload it onto YouTube. Right? So please subscribe to the YouTube channel when you get the video. So I'm going to also share the video. I'm going to give you the link to YouTube, and then you can watch. You can just go there, watch the video if you want to watch it, and then subscribe to the to the channel, right? And then the notes, I'll send them in the group so that you can also revise in your spare time. Please, I encourage you, do the homeworks. They will help you. You will notice you understand better in terms of assets, the differences between the different categories of what we're trying to do. Then also, I would encourage you to budget. Remember, like I said at the start of the lecture, these classes, when we go to February, they will be paid for. So please, we'll give you at least about a week or so to try to budget, try to find something. You don't need to pay the full payment upfront. You can pay in installments. If you don't have the full payment upfront, you can pay maybe 300 this month, 300 next month, and whatnot. It's very up to you guys. You can just pay in installments. My number is there. You can always try to contact me and we can talk more. If I don't answer your phone, please send a WhatsApp. I might be in another class because I also teach the MBA students. So right now I'm about to start an MBA class. So if I don't answer your call, don't give up. Just send a WhatsApp. I'll respond to you once I am free. I hope you all had a wonderful time. I hope it was a learning experience for some of you. Accounting can be difficult, but if you just follow through what we are doing, it will be very, very easy. A number of the students that I taught last semester, I think about half of the class got distinctions. So I know it's possible for you to get distinctions as long as you follow through what we're going to be doing. So we'll be doing quite a lot of examples, quite a lot of past exam papers just to help you out at the end of the day. So thank you for coming in. I hope you have a pleasant evening. Any last questions before we close the lecture for the day? Or someone says, do we have economics? Yes, we do have classes for economics. Economics 1B, I will advise in the groups when the class is going to be, but it's going to be next week. We're going to start it next week, but I will advise in the groups, don't worry. Then for those that are in the first semester that want economics 1A and whatnot, not yet, we'll do those ones in February. But for economics 1B, we'll start this coming week. I will advise in the group the specific date for the class. But I just thought let's start with accounting because accounting can be a bit tricky, so we need more time for you guys to capture what we're trying to do. Okay. Someone says, is the 800 once off or paid monthly? You can pay, the fee is 800 Rand. You can pay in installments. You can pay 300 Rand this month, 300 Rand next month, and then 200 Rand to complete the whole thing. Or you can just pay 800 once off at the beginning. That's still fine with us. So you can pay 800 once off, or you can chop it up if you can't afford to pay the full amount at once. You're free to chop it up to make it much more affordable for you. Okay. Let's see, is there any other question? Someone says, please share the slide with, okay, unfortunately, you just go through the slides. I'm going to send the slides. You have some of the information that you're asking for here. Let's see. 800 only. Yes, the 800 is only for financial reporting analysis. It's only for one module. It's only for one module. So you don't need to do everything. Just pick the courses that you specifically want and just pay only for those. Because I know some of the courses that you do at one course, they're not that difficult. That's why we don't say take package with every course, because it can be expensive. So just pick the courses. If you struggle with accounting, just do accounting, 800 Rand. If you also want economics, which means you have to pay another 800 Rand for the economics one, you can also join for that one also. All right. Any other question here? I don't see. Do you do public administration? Okay, public administration we don't usually do, but you can send me a WhatsApp. I can try to see if students are interested, then we can try to make it work for everyone. We can try to add some of the courses, but mainly for now, we are doing financial reporting analysis and economics that is going to start during the week, but our advice in time. Any other courses other than those two, I can help you, not a problem. But in terms of lessons, we might not have lessons for some of the other courses that you might be interested in. But just send me a WhatsApp and then we can talk more on WhatsApp. So thank you guys for coming in. I hope you have a pleasant evening. I need to start another class. So we'll see each other on Tuesday. We'll see each other on Tuesday. There's a class on Tuesday evening at 7 o'clock. There's another class for financial reporting analysis. Please join through so that it's beneficial to you. Thank you. Bye-bye.